Welcome, my friends. The news that another bank failure has occurred. Banking turmoil has now arrived in small-town USA. Heartland Tri-State of Elkhart, Kansas has failed and was sent into receivership by the Federal Deposit Insurance Corporation, FDIC. As you probably recall, a number of banks have failed so far in 2023. Silicon Valley Bank, Signature Bank, First Republic Bank, Silvergate Bank voluntarily shut down and went out of business. And Pacific West Bancorp was forced to merge with Bank of California just last week. What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. The banking turmoil of 2023 arrived in small-town America on Friday night when a tiny 4-branch bank in Kansas failed, becoming the 4th lender to be seized by regulators this year and the 5th to fold altogether. The Heartland Tri-State Bank, of Elkhart, Kansas, is the smallest to go under in 2023 by far. It had $139 million in assets when it went down Friday, according to the Federal Deposit Insurance Corporation. The other banks that failed thus far this year all had assets of more than $100 billion, including Silicon Valley Bank and Signature Bank. The biggest was First Republic, which had $229 billion when it was seized by regulators in May, becoming the second largest bank failure in U.S. history. The failures of Silicon Valley Bank and Signature Bank in March were the third and fourth biggest ever. Silvergate agreed in March to shut itself down voluntarily. It is not yet entirely clear why Heartland went down. The Kansas office of the state banking commissioner said in a release that Bank Commissioner David Herndon determined that Heartland Tri-State Bank was insolvent and that it became insolvent due to an isolated event. Overall, the Kansas banking industry is unaffected by this event and Kansas banks remain strong, the release stated. Heartland is one of thousands of small community banks that serve local areas across the U.S. Most banks in this country are more like Heartland than they are like industry giant J.P. Morgan Chase, which has thousands of branches and more than $3 trillion in assets. Heartland's headquarters city of Elkhart has a population of less than 2,000 people, according to 2021 U.S. Census records, and is located in the southwest corner of the state. Elkhart was among the many towns in that part of the country struck by Dust Bowl storms in the 1930s. Another community bank in that state, Dream First Bank, of Syracuse, Kansas, agreed to assume all of Heartland Tri-State's deposits and purchase essentially all of the failed bank's assets, according to the FDIC. The FDIC agreed to share future losses on loans purchased by Dream First. It estimates this failure will cost the FDIC's Deposit Insurance Fund $54.2 million. Dream First had $480 million in assets as of March 31st, making it the 1,515th largest in the U.S. Its founding dates to 1906, and it said on its website that it played a key role in growing the community and bringing the dairy industry to southwest Kansas. The recent closures of First Republic, Silicon Valley Bank and Signature Bank this year have shaken up the banking industry, prompting lawmakers to introduce new legislation to protect customer deposits and stabilize the financial system. Heartland Tri-State Bank is the first bank to fall since First Republic, the nation's second largest bank failure ever, in early May. The FDIC said bank customers can access their money by writing checks or using ATM or debit cards. They also won't have to change their banking, as they will automatically become customers of Dream First Bank. Heartland Tri-State Bank had approximately $139 million in total assets and $130 million in total deposits, the FDIC said. Dream First Bank also agreed to buy essentially all of Heartland Tri-State's failed assets. Loan customers should also be largely unaffected, the FDIC said, because the FDIC and Dream First Bank are entering an agreement to share in the losses and potential recoveries on the loans. You should continue to make payments, including escrow payments. As usual, the terms of your loan will not change, the FDIC said. The ongoing crisis surrounding the U.S. banking system struck again as Heartland Tri-State Bank of Elkhart was closed on July 29 by the Kansas office of the State Bank Commissioner, with the Federal Deposit Insurance Corporation, FDIC, taking control. On July 31, the 4 branches of Heartland Tri-State Bank will reopen as branches of Dream First Bank under normal business hours, the FDIC noted in a statement. Depositors of the failed bank will become customers of Dream First Bank, meaning that withdrawals, deposits, and loan transactions will be processed through Dream First Bank. Customers of Heartland Tri-State Bank should continue to use their existing branch location until the bank has completed the transition. Heartland Tri-State Bank is the first bank to collapse since troubled First Republic Bank was acquired by J.P. Morgan in May after efforts to rescue the company failed. It also follows the dramatic collapse of Silicon Valley Bank in March that triggered days of chaos in the U.S. banking system. The Heartland Tri-State Bank collapse also marks the second bank crisis of the week. On July 25, PacWest merged with Banc of California, with both banks seemingly looking to shore up amidst the banking industry turmoil. Behind the bank's failures is believed to be the rising interest rates in the United States along with poor risk management from financial institutions. The Federal Reserve increased its benchmark rate over the past year to more than 5.25% in July, the highest rate since 2007, in an effort to curb inflation in the country. In June, the inflation rate in the U.S. was 4.1% year over year. Heartland Tri-State Bank had approximately $139 million in total assets and $130 million in total deposits as of March. Along with deposits, Dream First Bank agreed to purchase all the failed bank's assets. The FDIC estimates that the cost to the Deposit Insurance Fund, DIF, will be $54.2 million. The DIF is an insurance fund created by Congress in 1933 and managed by the FDIC to protect the deposits at the nation's banks. Compared to other alternatives, Dream First Bank, National Association's acquisition was the least costly resolution for the DIF, said the FDIC. Democrats with the House Financial Services Committee have introduced several bills in June in what they described as the first wave of legislation aimed at addressing failures at major banks. The failures of Silicon Valley Bank, Signature Bank, and First Republic Bank make clear that it is past time for legislation aimed at strengthening the safety and soundness of our banking system and enhancing bank executive accountability, said at the time Congresswoman Maxine Waters. Congress must not sit idly by. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.